In last week's video, we covered the 6 kinds of bad credit and how they might affect your chances of getting a mortgage in 2023. In this video, we're going to have a look at different lenders and how their interest rates vary between, let's say, somebody who's got good credit, bad credit, and then maybe somebody in the middle who's got a couple of missed payments on the odd thing or so. Hello guys, my name's Christian Duncan. I'm a qualified mortgage broker in the UK. And in this channel, we help give tips and tricks to anybody looking to secure a mortgage. If you're new to the channel, then please think about subscribing. Now in this video, I'm going to demonstrate and give you some interest rates at the time of recording this video. This does not constitute mortgage advice, and remember, everybody's circumstances are completely different. And when we place a mortgage and speak to a client, we tailor our recommendation around their individual circumstances. This video is purely for educational purposes only. So let's start with high street lenders. This week we've seen the likes of HSBC reduce their interest rates to under 4% in a bidding war. We've also seen Virgin Money start to reduce theirs as well. Now these are great if you're employed with a normal income, no complex income, and you're looking to buy a standard construction property with no bad credit. If this is you, the chances are you're probably going to be a high street lender with a quite competitive interest rate. But this isn't for everybody. In fact, most people don't end up at the high street if they've got bad credit. So let's have a look at some figures to have a comparison and see how having a normal credit profile with no bad credit compares to somebody, let's say, with a slightly worse credit profile. Let's jump into it now. So across the 3 examples that I'm going to give you, we're going to stick to the same property value and the same borrowing arrangements. So let's say we're purchasing a £200,000 property with a 20% deposit. So we've got a £40,000 deposit and we're going to be borrowing £160,000 over a 25-year term. And again, for consistency, let's compare 5-year fixed term products, something that's quite popular with a lot of lenders at the moment. So HSBC are currently offering a deal with 4.31% with a 5-year fixed. Now this gives us a monthly payment of £879 per month. Now remember, this is for somebody with no bad credit, quite a straightforward income and looking to buy a standard construction property. So a nice, easy, straightforward case. Now remember, HSBC are a lender that make their decisions based on your credit score. So yes, they'll run you through a credit scoring system and it really is a computer says no approach. If you fit with them, great. If you don't, then we maybe need to look at another lender that credit searches over credit scores. Now if we move over to a lender that has a slightly bigger appetite for adverse lending called Kensington. Now these are really popular in the mortgage broker world and a lot of advisors use them. At the time of recording this video, their equivalent interest rate is 6.15%, so nearly a 2% difference from the previous rate with HSBC. But this lender is great for people with bad credit, whether that be a small amount of bad credit or quite a large amount. So again, a £200,000 purchase price with a £40,000 deposit, borrowing £160,000 over 25 years on a 5-year fixed is coming out at £1,052 per month. Now this is a massive £173 difference over the previous deal with HSBC for somebody with no bad credit. Now because this is over a 5-year fixed term, it's actually costing you £10,400 more. Now I know that sounds like a lot of money, but if you sat in rented accommodation for the next 5 years and put off buying that property, you'd probably spend this and more servicing the rent with the landlord. So please don't let this deter you. Now where Kensington are fantastic is they don't credit score, but they do credit search. So what this means is if you've got some defaults and some late payments or maybe the odd CCJ on your credit profile and your credit score is completely shot, the likes of the previous lender, HSBC, who we already discussed, are just going to say no to you straight away. Whereas Kensington will consider the application. What they'll do is they'll run a credit search on you, ignore the score completely, and they'll look at your credit profile line by line to make sure that you've got a credit profile that fits within their criteria. Now here's 5 reasons why Kensington might be your next lender if you've got a little bit of bad credit. The first reason is they will completely ignore any unsecured missed payments in the last 12 months up to a maximum of 2 if you've brought them up to date. which means you could have missed 2 payments on your car finance in the last 12 months, as long as they are currently up to date. They'll probably want a little bit of an explanation behind this and possibly to look at your bank statements that month just to see how you was managing your money. But yes, this is in their criteria in black and white, and it's something that they are really, really good at. Now, secondly, they will ignore any mortgage arrears over 36 months, which means you could have missed payments from over 3 years ago and they'll completely ignore them, regardless of their amount. Now, this is up to underwriters' discretion, and the reason why this is they'll want to make sure that since this, you have been making the payments frequently, and they'll definitely want a little bit of a story to understand what led to these arrears. CCJs. Now, this is point number 3. If you've got a CCJ which is older than 3 years old, again, Kensington will accept this. Now, they might want you to satisfy this, but before you do it, speak to a mortgage broker, because sometimes paying a CCJ off doesn't actually get you a better rate or product with any lender. It might open you up to more lenders, but again, speak to an advisor before you do this. Don't jump the gun. Point number 4. Now, this one's really important, and a lot of people forget about this. Kensington Mortgages will ignore any defaults or missed payments from mobile phone bills or insurance premiums. Now, both of those can be an absolute nightmare, and it's really common that you see them making errors and reporting it to credit reference agencies. So quite often, people have made the payments or maybe made a double payment and the month after missed a payment, and this results in them getting a missed payment on the credit profile. Not with Kensington, they'll completely ignore it. And again, point number 5, debt management plans. You can actually get a mortgage if you're still in a debt management plan. Now, with Kensington, what they like to see is a 12-month track record of you maintaining those payments. So let's say you've got an agreement with the debt management company to make a payment of £150 per month. They'll want to see a statement to ensure that you've been making that £150 a month payment for the previous 12 months and that this has been done in a satisfactory state. Okay, so we've covered a lender that's really, really popular with mortgage advisors in the mortgage industry for the reasons that I've already given. Now let's look at a lender that's at the complete opposite scale to both of these. They'll do some of the dirtiest case that there are out there, and they're fantastic. We place loads of clients with this particular lender, and the lender is called Bluestone. Now, Bluestone aren't for the faint-hearted, and really they're there to be used and abused. So the clients that we do place with Bluestone, we've sort of put them on a credit repair scheme. So we'll put them with Bluestone, let's say on a 3 or a 5 year fixed term, while they repair their credit score. Now, while they're doing this, we'll keep touching base with them to see how they're going on, and they're always able to contact us to make sure that they're stepping in the right direction. With the plan being, when they get to the end of their fixed term with Bluestone, we can then put them with somebody like the High Street, or if they're not quite ready, maybe the likes of Kensington, and chase that more attractive interest rate. It's really important though, if you do go with a lender like this, get your head down, get stuck into it, and let's get you through the other side of it. Now, to give you an idea and to compare it to the previous 2 companies, so far we've had HSBC and Kensington Mortgages. So we've had a lender that deals with pretty much no adverse, and a lender that's middle of the market that'll do quite a bit, but not all the hefty stuff. Now, again, for consistency, we've got a £200,000 purchase price, a £40,000 deposit, and we're borrowing £160,000 over 25 years, fixed for 5 years. Now, the interest rate that Bluestone is offering is 7.59%, so quite a big difference. Now, this is giving us a monthly payment of £322 more than HSBC, the lender that will accept you with no or little bad credit. This is giving us a monthly payment of £1,201, and over the 5 year fixed term, it's going to cost you around £19,000 more than HSBC. So as I've said, not for the faint-hearted, but it will get you on the property ladder. Now, I know what you're thinking, £19,000, why would you even bother? To some people, home ownership is really, really important. It gives them stability, it gives them purpose, and it gives their family some securities to know that that's their home. Things like giving the kids their own bedrooms and letting them decorate is really important to some people. Now, as I've previously said, these types of lenders charge more to cover and mitigate the risk that you pose to them. So here's 5 points to why we might place a client with Bluestone over, let's say, Kensington or HSBC, for example. Point 1. Now, this has got to be one of the most important pieces of criteria that Bluestone offer. Anything over 3 years old, they'll just completely ignore it. CCJs, defaults, they're not fussed. Late payments, just ignore them, regardless of value. 3 years old, they'll ignore it. Point 2. Just like Kensington, anything communications based, they'll completely ignore. It's quite common with adverse lenders and some building societies to see this in their criteria because they know it's really common and it's quite often a sticking point for most borrowers. Point 3. Now this one's really important and I've recently placed a client with them for this. They won't allow any mortgage arrears in the most recent 12 months, but in month 13 to 24, they'll allow a maximum of 3 missed mortgage payments. Now this is massive, and it's quite common to see when people are going through a relationship breakdown or a divorce that they have mortgage arrears. So this is a key part of their criteria which can help get home ownership over the line for some people. Point 4, conditional offer. When Bluestone issue an offer, their offer lasts for 4 months. Now what they'll do sometimes is, let's say you've got a client that doesn't fit with them on criteria today, but they will in 2 weeks' time. They'll issue a conditional offer. Now, as far as I'm aware, this is the only lender on the market to do this, but I do stand to be corrected. What they'll do, they'll issue a conditional offer and explain in their offer that after this certain date, this client can then proceed to completion. Once, let's say it's a CCJ drops off or their arrears become a certain point. This is fantastic. And again, we've placed clients with Bluestone alone just on this key part of criteria. And finally, anything under £300, regardless of when it was, they'll completely ignore. So if you had an account that went into default yesterday and it was below £300, they'll ignore it. If you got a CCJ last week that was below £300, again, completely ignored. This is brilliant. And it's a great way of getting somebody with a colourful credit profile into their dream home. So as you can see, Bluestone have quite a relaxed criteria compared to the likes of HSBC and Kensington. They do charge a premium for this, and like I said, it isn't a one shoe fits all, so all of the information that I've given today doesn't constitute advice and purely is just criteria from the lenders. If you've got some bad credit and you're unsure where to start, please contact me, the link is in the show notes below, and we can have a discussion to see if we can help you. Thanks for tuning in to today's video. I hope you found the content within it useful. If you haven't already, then please think about subscribing and I'll see you in the next one.